Good morning, good morning, good morning. Let me just finish getting all the little details set up. Un momento, por favor. Just a few seconds, please. Happy Tuesday. Hang on. Hang on, it says the stream is live and then I click on it and then it's not live, so hang on. Live stream offline, but will it be here today? I guess so. Will it be here today? I guess so. There we go. I guess there's just a tremendous delay today. I don't know. All right, so I guess it's live. All right, cool. So good morning. Let me just double check that everyone and the others coming over. Please. Oops. Yeah, it's all good. There's something is freezing up, I think is what it is. Hopefully it's not me. So in any case, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you so much for being a client to Traders Way. Oh, you know what? I can't see the chat. Let me move it so I can see the chat. There we go. All right, cool. So, hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. It's very nice to see you here this morning. I am Wayne McDonald, and I am a currency trader, and I love trading currencies. I've been trading currencies for 15 years. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur. Before that, I worked at NASA. Before that, I was on the board of directors for a very large nonprofit organization. Other than that, so that's my whole life in a nutshell. So what are we going to do today? Let's trade some currencies. Okay, we're going to trade some currencies. We're going to look at dollar pairs. We're going to look at yen pairs. We're going to look at gold and oil. And that's probably enough for an hour and a half, right? An hour or so. Yeah, it's true, Charles. Charles asks if I was a supermodel, and I was, and I am now the chairperson for the International Association of Retired Male Models. And I just love giving back to that organization. What was my role at NASA? I was an aviation research assistant. So I did a lot of very interesting things. I got to hang out on tar mats and watch C-130s and U-2s and all kinds of wonderful aircraft doing touch and goes as they practiced. And I got to see the Mars rovers years before they went to Mars. Really cool stuff. And I think the most impressive thing I did at NASA was lead a team of space shuttle pilots and such. And we docked at the International Space Station. All in simulation, of course, but just another day at NASA, I suppose. Let me tell you, that's probably the most difficult thing I've done, and it's probably the most difficult thing I've ever possibly going to do in my life is dock that space shuttle, not without computers, obviously. You had to manually dock at the international, the ISS. And I think we crashed it 8 times in a row, but the ninth, the ninth one docked. But, you have all the axes moving, plus it's moving in a certain trajectory and a speed, and it's crazy to kind of get it to dock just right manually. And as a captain, you can't see anything. You actually don't have a window. I think there's one person that actually looks out a window, and everyone else is doing stuff with the coordination of everyone else. And the captain's more of a coordinator in that case. And so everyone's doing this, and this, and only one person's got a little window about this size. And, and I'm pretty sure it's so difficult that they don't actually do it manually. It's got to just be a docking computer. But anyways, Joe, did I get your email? No, I don't think so. Unless it was broken English. Every once in a while I get, every 3 days I get like broken English emails, and I don't know what they are, and I don't have time. But I don't think so I don't know, maybe not. No, I didn't. Anyways, fascinating stuff. All right, well, do it again if it's important. Okay, you're important to me, so do it. Send another one. All right, so let's enough about me. Let's do our trading. This is where we left off yesterday. Yesterday we were over here. These are daily pivots for WTI, and we were buyers of dips, if you recall. Okay. Here's an interesting thing, right? Down to the daily central. Where is the buy zone? Somewhere between those two pivots. That's straight out of the book. I wrote it 10, 12 years ago. It was published 10 years ago. So, this is just so standard operating procedure type stuff. Again, imagine writing a book. Imagine writing a book 11 years ago, and you're like, this is the pattern you'd look for if you were a bull. Okay. Now, the other interesting part of that is, based on that strategy, that's the target. That's the conservative target. Up here is the aggressive target. All right. So it just is. I mean, I don't know. That's what I like about it. It just is. It's not good. It's not bad. That's not my prediction. That's just basic technical analysis, and it's working. I don't know. Let me ask you, are there reasons to be a bull on oil? Eternal Soul has the book sitting right there. Yeah, I got mine right there, actually. But is there a reason for you to be a bull? So then that is catchable. That is tradable. Okay. Now the interesting thing is, if you were a bear, it was also tradable. And you'll say, well, Wayne, it didn't make any money. Well, that doesn't matter, because nobody knows, right? Nobody knows if it's going to go up or down. But a trader is supposed to know where to buy and sell. There is a difference. So right there, as a bear, is a fantastic, amazing opportunity to sell. And, these are hours. So 1, 2, 3, 4, 5, 6, 7, 8, 9. For the first 9 or 10 hours of the day, you were making money. Okay. Now it's only about 30 cents, so, $300 per contract. But then it got down to the buy zone, and off she goes. Hot to go, H-O-T-T-O-G-O. Okay, so again, if you're a bear, there was an opportunity to make a little bit of money. If you were a bull, there was more opportunity to make money. Okay, You just have to ask yourself, where are you in the context of this rising? That's fractal geometry now. Okay? So a bear is selling here, here, and here. Okay? Let me mark those. Let me do it this way. Okay? Bears were selling here. Okay, that's fine. Actually, that's probably bulls taking profit. But anyways, let's go with it. Okay? And there's something going on there, right? I mean, there's all these sell zones. And a bear is thinking lower high, right? So they would have had this fibbed. The reason we drew this gray zone is it could be a potential sell zone. I don't know if you remember covering this. We were way down here yesterday. I said it could come up here and drop back down if you're a bear off of this role reversal. Well, instead of acting as resistance, it acted as support. That's just technical analysis again. But expecting a lower high today is very, 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 very likely, and actually a very good trade if you happen to be a bear on oil. Let's get this out of the way. Okay, a bear would have been, come on, let's see if I can grab the action. There we go. A bear would have been thinking this today, and there is absolutely nothing wrong with that. If you had sold up here, you'd played it perfectly. You had an opportunity to make a little bit of money, and then the overall trend took over. So it's okay to be a bear. You could say, well, in the medium term, you were a bear because of the significant pullback, lower high, lower low. Why not think of a lower high? You were just wrong. Well, that happens in trading. Don't worry about it. But you had the opportunity to sell it beautifully. These are daily pivots. Okay? But you could also say, well, on the long run, this seems to be up. So in that case, you're a bull, and your job is to identify places to be a bull. How about 100% Fibonacci? Well, I guess it's not even quite, right? How about a break above resistance? That you're going to buy the dip on that, right? Again, just simple technical analysis. Well, R asks, is this a scalp or a swing? Well, on a daily, I mean, it's really neither. That's typically a spot trade, right? So someone bought it at London Open, and now we're coming into New York Open, and you should already be done and out. Okay? So that's just a spot trade. You're in it 2 or 3 hours, and you're done. Okay? Yeah, cool. So now you have a choice. Are you going to play this like a double top? Well, whoever sold it here and made money is going to sell it here and try again. Are they going to be correct? Are they going to reverse this whole thing? I don't know. Probably not. Right? But you have to get to that point where you don't know if there's enough bears to sell here. But you have to say there are bears there. Whoever sold this will sell that. Why would they? Because they're bearish. It's a top. It's resistance. It's a daily pivot zone. Of course they're going to sell it. What would you do if you were a bear? You'd sell that. Okay? Is it right? Well, probably not, but that's besides the point. So now we can change the template and take a look and see if there's anything meaningful on a higher time frame. Is this important to you as a bull? Yes. Well, R says, would bulls take profit at resistance? Yeah. If you think it's resistance, then yeah. If you don't think it's resistance, then no. Remember, that's your analysis now. Okay? There's nothing great here based on weekly pivots, which means you're supposed to be using the moving averages as dynamic levels of support if you're a bull, or resistance as a bear. And on this time frame, that's not that impressive either. So let's check the 4 hour. You're basically riding the 21 here, but I've seen better. But there's lots of reasons to still be bullish. Okay. So your target for the week then is 73.30 to 74.30. But you already know that because we did it yesterday. Let's take a look at a different point of view. Let's look at monthly pivots. Okay. Are these traders that bought there, are they feeling good and confident in what they're doing? Thank you, Hassan. Are these guys, are these buyers confident in what they've done? Are they still bullish? And are they going to ride this out all the way to the target? Yeah, see, this is trader psychology. You need to, that's important information. Are they going to take profit or are they going to go all the way? Where's all the way? Well, 15 days ago, this was the bullish target. And you're like, what? 15 days ago? I'm like, yeah, this is a buy zone at 67. We're targeting basically 75. Not quite. We'll call it 74.24 or 73. Does anybody remember doing that? Our buy zone was actually somewhere between 66.50 and 65. I mean, 65 to 75. You know, that's $10,000 per contract if it had come down to there. But that was our plan on the first day of the month, right? Right? I'm just making sure it's all coming together. Yeah, of course, right? 65 to 66.50 is the buy zone. Yeah? Don't forget to ask questions, guys. While we're at it, would you be so kind as to give YouTube the little thumbs up to say, hey, this live webinar is not garbage? You don't have to like it. Just a thumbs up says it's not garbage. Okay. Well, Charles, Chuck. This is the standard operating procedure buy zone for bulls. Okay. So 65 is better, but 66.50 was definitely in the game. Okay. And this one's been wild and crazy, huh? Euro dollar, yeah, I'll get there. Baby. So USD is strong again. Well, yesterday we did a relative strength exercise and Aussie wasn't strong. And so the US dollar has gained some strength, at least according to this, comparatively, relatively to the Aussie. So just looking at this, we don't know much. what is the one thing that you see here that is like a slap in the face, but probably brings you love and joy? So a slap in the face by a beautiful woman, right? Smack. Oh, that was awesome. What do you see here? What do you see here? This is Aussie versus USD. What's the awesomeness? If you are a swing trader, if you've taken the swing trading course at FX Bootcamp, if you were part of the swing trading team at FX Bootcamp, on Friday of last week, yeah, not even this week, before the pivots. I guess I got to get used to this. Okay, before the pivots, we were here. Wait, are these monthly? This might even, I might be screwing this up. Hang on. I might be screwing this up, and if so, I apologize. M3 weekly. No, these are weekly, right? Yeah. So last week, okay, there were lots of things way out of position. Okay, so I said if you're bullish, you'd be waiting for a significant drop down here. But if you're bearish, we're at the sell pivot. Okay, that's something we discussed last week before the pivots were printed, that if you were bearish, selling it right in here was the thing to be doing. Or, of course, Monday morning. But the target is here. That's the conservative target. That's the aggressive target. And because it started at M3 and not the central, I tend to get rid of this one. Okay. 75.50 with a target of 74. I mean, it's not even a lot of pips. Oops. Okay. It's cool, right? Now, if you're a bull, the thing we talked about last week was this is the buy zone. And that you would start looking for that. And ideally, and here's the interesting part of it, right? Ideally, if you're a bull and you're getting down to this price, which I have at 74.80. So if you're a buyer of 74.80, that you would want it, you know, Tuesday or Wednesday, ideally Tuesday. Yeah, Joe, well, I don't think 150 pips is very many pips for a swing. So it's more like you did what you did and you got paid. It's only 150 pips. Pound yen would give you 400 pips. Okay. Okay. So Hassan, this is your entry and this is your entry. Okay. If you're a bull, if it happened on Thursday or Friday, it's not that good. Okay. If you're up here and you're a bull and you're waiting for it to fall, you want it to kind of hit this area on a Tuesday is most ideal, and it just so happens to be Tuesday today. Wednesday is okay. Sometimes it happens on Monday, but it's not that often because it has to fall really hard and then come back, which means maybe it's not that good. But if you are a bull, it is now an opportunity for you to start paying attention, getting serious about looking at your entries. Okay, you get that, guys? Remember, I don't care if you're a bull or a bear. You just have to be one. So if you are a bear, you sell here. It's ridiculously easy, right? That's textbook. It's child's play, this sell right here. Now, is it going to make the lower low? Is it going to hit our target? I have no idea. That I have no idea about. And what if you're a bull? Well, this is child's play, a buying opportunity. Now, when it gets close, and you could define this as close, you can drop into a small time frame like this 5-minute and start looking for 5A crosses, reversal patterns, whatever makes you want to buy it. But you're pretty gosh darn close to the area which in which you want to buy it. You want to be north, probably before it says 75, right? It's 74.90. I think I told you last week 74.80. So you can see how close we are. So it's your call. Again, I don't know if it's going to go up. I don't know if it's going to go down. You don't know if it's going to go up. You don't know it's going to go down. But if you know what you want it to do, if you know you're a bull, then all you have to do is find your price. Okay, well, we're pretty close to the price. And then once you're near your price, then you use technical analysis. Okay? Right? That's where you use technical analysis. What do you use? Oscillator crosses? Right? So everything else is sort of done. So you could just go to, I guess we'll do this one. Okay? You could be taking Stokes crosses. You could be doing 5A crosses. You could wait on this 5-minute chart for it to come up, come down, and then this cycles up, this cycles down, and you buy this, treat it like a double bottom, or you let that go as well, have that come up further, okay, and then you start buying. Okay, so you have to decide now, are you a buyer? Is that reasonably close to your price? Are you buying the first touch, the second touch, the third touch, the break, right? I think what happens to a lot of amateur traders is they get into trades without the other analysis first. That, you don't realize its potential support. You don't realize you like 74.80. You don't realize, right? There's no other kind of reason to it. But if you knew this morning, just you were ready to go to buy it at that makes sense, doesn't it? This is your trade plan. So now you just need something on the 5-minute chart to give you permission to go in. It's not that complicated, right? Yeah, sorry, I changed my template so the watermark disappeared. Here it is. Okay. So I think most people trade the smaller time frames. Isn't this the part that you want? Isn't this the information that matters? So now you have to decide, are you trading this as a retracement? Right? Inverse head and shoulders type thing? Okay, can you guys see that? Sometimes you might get lost in the forest, right? So if I've drawn it this way, can you see how last Friday that this was sellable? It's Tuesday, right? You see how that's sellable? Well, I can tell you that someone is thinking about selling this now. Does this seem like a good place to sell to you when I draw it this way? So as we know that professional traders are not going to come into the market as bears here, right? That's how you should interpret that. You could say, as an expert in the foreign exchange market, I don't believe professional, institutional sellers are going to come in at this price. So whoever's selling now because they're trading the 5-minute chart or only or something, they're not going to get the follow-on they're hoping, right? So I think that should be useful information for you in your analysis. So if we're not going to get the bears there, who might show up? Well, maybe some bulls. Okay. Especially if these bulls get what they want. Okay. Okay. It might have been the Aussie yen, human god. But like Aussie hasn't given us lots of reason to want to buy it. Now, I want it to, but we're not quite there. But I do want Aussie to go up because I want China to go up. And I want China to go up because Europe is improving and all this kind of stuff. Just probably not today. But neutral, like what does that mean? Like on what time frame? Is this bullish right now? No. Right? If I back out on the 4-hour or probably even daily, it's not bullish. Okay? Right? So that's more like why I'm neutral, but I would like it to be bullish. So this is a beautiful reversal. There may be a head and shoulders. So you could just set it up like this is the head and shoulders. Now, when we were up here on Friday afternoon, it seemed to, like it would take forever for this to come all the way back down. But it did. Okay. That is clearly a sell. So what I'm telling you is if you are a bull, there's a lot of risk in this market. It's not really that bullish on the higher time frames. I wouldn't call it a bullish trend. Okay? But if you're a bull, you're setting it up this way. Right? Or you're not a bull. This is a classic weekly swing trade. This is an inverse head and shoulders pattern. Right? This is a pullback after significant rise at a take profit zone. These are all important. This is a 1, 2, 3 after a monthly support, a bounce at monthly support, which I mentioned days ago that this takes us to the R line, which is 77 basically. So it bounced at support at 74. It's on its way to 77 if you're a bull. Okay. Now, what if it drops down to here? What if this channel doesn't hold? Then, in that case, you're just buying a double bottom. You're probably scalping. You're much, 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 much less confident as a bull. But this is just doing your job. It's the kind of the way I look at it. So you don't have to be in love with it, but if you're a bull and you don't buy this, then I doubt you're actually a bull. That's all. That's all I'm saying. We don't know what's right, but if you know what you are, what team you're on, that's just a standard play, right? That's just a bump and roll, just whatever. It's just your job, okay? Freddie Rice wants to do fundamental analysis. You should try the fundamentals course at fxbootcamp.com. That's one place. Yeah, and what'll end up happening, Freddie, is I think within the first 5 or 6 hours of the training, you will be able to manage the balance sheet of a commercial bank. How cool is that? Okay. No, it's not a dumb question. All right. So I probably have beaten that like a dead horse. You can't beat a dead horse. You can't beat a dead horse. Momento mori. Momento mori. All right. So there's oil. Aussie. Aussie. Okay. So how do you want to play this? Has it been bullish or bearish this year? Well, this year, the first 4 months did nothing. Awesome blossom. Okay. What is our target? What is our bearish target? Okay. What is the bearish target for the month of May, euro dollar? I'll give you a hint. We did it back in April. What did we say at the end of April? The target was for May. The target was for May. The cows broke my hay. By the way, thank you guys for attending the webinar. Thank you for asking questions. Thank you for being professional and courteous in the webinars. I hope you really get value out of these sessions. And I'll remind you to subscribe. I'm going to do more and more videos on YouTube. What happens is when I pop them on YouTube, if you're a subscriber and you click on the little bell when you subscribe, you immediately get a notification. Bing! Live webinar. So you can just get here with one click. Even if you're on your phone, boom, it just brings you right here. So I would like to remind you of that as well. All right, is anyone typing the target? I guess maybe no, 118. Okay. Okay, well, let's go over it. Let me change this now. Let me click. Is that easier? Can you see the X? Okay. So we are now, as bears, done. Okay. We're done now. You're like, wait, it's only the 15th of the month. So go on vacation. Go to an old folks home and just hang out and listen to war stories. Well, ask for love stories, I guess, is probably easier. So that's that. Now there are further bearish opportunities, but they're just less likely. We're worried about fundamentals, right? Is it too early? Yeah, I wouldn't even look at it. Now, I know it's been moving, the nightlife guy, but yeah, it wouldn't be a flow trade, which is fine. It'd be a technical trade. Maybe there's some fundamentals behind it. It's just not what I do with the peso. That's all. So if since US is it too early? Yeah. I mean, you're weeks early. Doesn't mean you won't get a move. Oh, it's GI? Yeah. That's your pulling cable channel. The cable GI is actually funny. Okay. So guys, if you're right, no, I know. So if we are bears and if we're supposed to be done, what does it mean for the rest of the market that may not be bearish? Well, it's not necessarily buy in. It's not necessarily get in. It's okay. It's not necessarily it's their turn. You guys are not using the proper language. You're sort of right. It's a place in which if you happen to be bullish, right, you should expect some green candles in this area. That would be your trade plan, right? So now that we're at this price, and I mean right at this second, you could drop to the 5-minute chart and start finding reasons to buy. And you're going to scalp your way into a potential double bottom. Okay, this being your double bottom. Okay. Okay. So if you have, right, if you're a bear, selling here is very, very bad. And selling down here is horrid. So really, it's just really up to the bulls trying to decide where are these bears going to take profit. So it could rally up here, or the news can come out and it drops further and then pops back up. But you have to be in the mentality of you just simply can't sell it here. Right? If you sell it here, you turn to salt immediately, instantly. You fell for the temptation. And now you have to pay the penalty. You turn to a pile of salt. Okay? Don't even test it. What if I'm right? All right, so anyways, there's our support. So these are the places, like for example, if you're a scalper, this is where you start scalping green candles. If that fails, then the next scalp is down in here. By the way, the U.S. retail sales report comes out in 6 minutes. It is expected to create fall. Of course it would. 70% of GDP is C. Now, I don't have a good drawing tool, so you have to just, well, I guess I could do it this way. Okay. Okay. GDP is equal to what? Consumption plus investment plus what? I guess I have it capitalized, right? Yeah. Plus, what else goes into GDP? Government spending plus net X. Imports minus exports. It won't let me go any further. Minus, why can't I do X? Oh, I guess I can do it, no. Okay. So that's, okay. I'm trying to get this somewhere where you can see it. Okay, great. So 70% of GDP is C. Okay. Consumption, consumer spending, okay, basically retail sales. Not completely retail sales, but retail sales is a big part of that. Okay, so that's what we're looking at. So when you look at when these news events come out, you should tell yourself that, oh, this has to do with calculating GDP. GDP is important because it's productivity or income of the entire country. And GDP going up could be inflationary. GDP going down could be deflationary, right? You could look at things like Phillips curves and stuff. So if GDP is falling, unemployment's rising, and all these things are bad, especially if you're the Fed and you have a dual mandate. So it moves GDP up and down. Therefore, it can change, certainly influence, but basically it can change the central banking policy if it goes too high or too low. And when the market expects the central bank to change, right, expectations, it's usually a star. So if GDP star, expected GDP, changes, just the expectation of the change changes the expectation of what the central bank is expected to do. And therefore, that expectation will change what investors and traders will do now in the short run in the market based on expectations in the future in the longer run. Okay? So, for example, if you expect your house to be on fire tomorrow, right? You sleep in a hotel tonight. Right? Kind of thing.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configuration are working properly, and you are now ready to listen to our other voice channels.
Did you guys hear that all right? Well, it's not buy the rumor, sell the news kind of thing, but I suppose you could kind of look at it that way.
Just to recap, one of the news outlets now correcting their earlier headline saying that Mexico's Economy Minister Guajardo has said there is not likely to be a deal by May 17th as we originally reported. And the dollar peso moving back towards session highs at 1976.
So as you heard, this is TradeTheNews.com.
Under a minute to the Empire Manufacturing for May expected at 15. Advanced retail sales for April expected 0.3%.
Goodlow reiterating that China must reduce barriers, forced IP tech transfers.
The Empire Manufacturing and advanced retail sales data in just a few seconds. Empire are 20.1 above the 15 expected. Retail sales in line at 0.3%. Back month rise up 0.2 to 0.8%. X autos at 0.3% is 0.2 lower than expected, but back month rise up 0.2 to 0.4%. X autos and gas at 0.3% is 0.1 lower than expected. Back month rise up again to 0.4% from 0.3%. Better than expected. Empire price paid index rising to 54 from 47.4 prior. Orders at 16 up from 9 prior in the Empire data.
Empire state of mind.
Overall, the dollar holding its firmer tone. The dollar yield 110.13 following the release of the strong May Empire manufacturing reading. And this is one of the first looks at May data. April retail sales largely in line with expectations.
Just watching it doesn't mean it's a good sell. Yeah, Mango Boy says trade the news handy mostly for scalping. Well, this type of trading, yeah. But remember, what I think is more important than news events is fundamentals. Okay. All right. But anyways, coming down into here, it's just still not a place I want to sell, so that's fine. I'm in control. Cool. And by the way, thanks for the likes or the thumbs up kind of thing. I appreciate that. This doesn't suck. The next place, as you know, that I would like to buy it is way down in here. If I was a bull, that I would want to buy it down into there. I want to see how this affected yens, though, if at all. So I'm just going to move. All righty. Okay, so let's break this down. If I can. Oh, I see it's on daily. Let's go to hourly. Okay. Where is this going? Well, bulls on Friday, we had this gray zone marked as a bullish buy zone on Friday. And on that Friday, if you happen to be a bull, your conservative target is here. And if you're lucky enough to get closer to the R2, I believe what I said is it'll probably stick its neck out to grab that and then come down. Okay. Right? How nice is that? Okay. We did that on Friday, so now we're approaching the target. 110.27 is the 110.28 is the conservative target. The aggressive target is 110.61, but really what we're saying is it'll stick its neck out to here and then drop. But to each his own. Should we go to the yens? I guess yeah, okay. So we talked about Aussie versus dollar. Okay. This is a little too elevated if you're bullish. Okay. So the talk last week was it's likely to open too bullish, and if you're a bull, your strategy then is to buy it off the 21 and ride that up, right? So basically, you know, you're kind of looking at a move like that. But that's the risk of buying something overbought. You can't even use the pivots. There's no swing behind it. It's not a great reversal here. But if you did sell at like, I mean, the line is 62.50-ish. It's a little higher, 62.57 or 82.57. So if you're playing that as your top, your target is down here. So if you're short basically now at 82.50, your target for the rest of the week is 81. So 150 pip drop. Again, not a huge move, but that's what you're thinking if you're this. Okay. And we saw, you know, sometimes it's hard to understand the vulnerability of something being bullish for the last 2 or 3 days in a row. And then I say, hey, well, it's going to open next week to bullish. That shows vulnerability. Now, typically, and I think I would have said something like this on Friday, in that typically what happens is it stays bullish, rallies up into an area that forces the bulls out, and then you get the counter trend trade move. This case, it didn't happen that way. It didn't make it up there and collapsed, but it collapsed. And that's what happens when you're buying without real support. Buying off the 21 is a dynamic level of support. Okay, so it's not as good, so to speak. Okay, I like market support. Now, if you are a bull still and you do want to buy it, you have the central that might help you. You have the 4-hour 21 that might help you. And you buy that, and your target now as a bull is 85. So it's 150 pips down or 300 pips up, right? But I think up is more work. So it comes down to your bias. Okay. Okay. So if you're going to buy it, buy low off support. If you're going to sell it, sell high off resistance. Just make sure you do one of them well. Okay. Can you see how if you were sitting here waiting at the central pivot, and you saw sort of like bouncy, bouncy, bounce, and then whoa, right? A move from here to here over, right? You had an hour to put something like this together. Right, and at this point you would jam your stop and just hope you survive, or keep your stop close at the very least. Okay. Now, and if you're a bear, this is a sell zone, and this is a sell zone, and this is a sell zone. So if you're a bear, would you sell one of these gray areas? 82.50, for example, is one. The next one is kind of a little higher, 82.60, but what's the big difference? Not a lot. Then the next one up here, you know, maybe we need to go to a 15-minute chart. Yeah, I mean, they're all fine, right? So if I was a bear now, I'd say sell here, here, and here. See the logic? If I'm a bear, sell here, here, here. Well, if I'm a bull, I would buy here, here, or here. And you wait. And you get to those prices and you wait for things like bullish engulfing candles at support. Might be bullish, right? A bullish engulfing candle at support, yeah, it might be bullish. Well, what if it turns bearish here or here or here? Are you going to sell it? These decisions need to be made before they happen. Okay? Right? Before they happen? Kiwi, not quite ready. Pound, I guess, is going to be more interesting, right? All right. So this opened too bearish. Actually, let me change it. It opened bullish. Okay, you see this? If you bought that and lost money, good job. If you bought that and lost money, good job. Assuming you're a bull. if you bought it but you were a bear, then shame on you. All right, so let's connect some of these. Well, at least that. Well, you know what? Let's do a pitchfork. Just to look for, just to identify when trends might be breaking or something. Okay. So like if you found yourself up here, you could say, well, we broke the trend. Okay. Okay. So if you bought there, it failed and you took a loss, and that happens. And maybe because it's still technically bearish. Okay. Where's the target if you were a bear? So having drawn this X, one thing I can tell you is on our conversation on Friday afternoon, and by our, I mean the swing trading group. So there's a group of us that meets live and sets up our swing trades. We do it on Friday afternoon. So we're always talking, right, the day before we get new weekly pivots. Before we get the pivots, we're setting up the trades. And you can see that on Friday afternoon is a clear sell. Well, that's actually Friday, right? So let's get off of that. That's actually Friday. But, right? And then the next opportunity on that 4 hour is this retracement back in here if you're a bear. Because we know this and this is bearish. Okay? On a monthly basis. On a weekly basis, this and this. Okay? So let's back out now. Let's pull all this together. Bears are trying to get down here. Okay? So this person here, the person that sold in the last, right, the last day or so of last month, those bears are targeting here. Okay? What will they do? Do you think they will sell at this 21? And go for that? You tell me. Is that what they have in mind? Yeah, it should be. Then the next part, the reason I put an X here is that's where they will get out. That's the target for the month of May. What will that do to bulls? Will that offer an opportunity if we believe bears are going to take profit? Here. See, now you can predict the future. Okay, so you put that into your planning, you put that into your analysis. Okay. What about turning bullish here at the monthly support pivot? It's not a good pivot, but what's the counter argument to this bearishness? Now, I know there are bears there, and I know that they are thinking about completing that plan. I know that because it makes sense. I don't know it for fact. I just know that that's how bears trade. So that's what they're thinking. We just don't know how many bears there are and how many bulls, right? So let's flip the switch here. Now we're bullish. And you just like the monthly support pivot for some reason. I don't tend to like it, but we've talked ourselves into it. We like it for whatever reason. Maybe there's a 618 Fibonacci retracement here. Right? Right? It's a 786, so whatever. So let's clean this up. What would you like to do if you were a bull? Okay. All right. Well, first of all, last week, this was our buy zone. Our best buying price. That's where we were hoping to buy. Okay. The fact that this collapsed on us is disappointing, but that's that. So moving to this week, where's the zone now that we would like to buy? That's right there. So I think what you would do if you were a bull is you would mark that up as support. You're going to mark this up as resistance. You're going to buy low and sell high. If you're a bull, you're simply hoping to buy low, right? You see where I'm coming from? That's the bullish swing, right? If you know your pivot points, that's exactly the right? That's where you want to be buying. So you could have bought it on Friday. And this is still the buy zone, so you could have bought it on Sunday or Monday. And now it's kind of moving along. It's not doing great, but you understand you're being a bull in not a terribly bullish market, right? So the next point is, well, what if it breaks and then collapses and breaks next week? Then you should be more aggressive next week. Okay. So to take this further, you have to decide, what do those monthly pivots do to your trade planning? Is this bearish or bullish? Well, we don't have those monthly pivots here anymore, but should it be influential to your decision-making process, knowing that these people here that shorted here have a plan, and you believe you know what their target is? Is that relevant information? You know what their target is? Well, it's certainly supposed to be important, right? So, will they be afraid if you got this over the next few days? That would get them to hit the panic button. That would get them to move their stops and get knocked out. That would force them out. They would limp out, right? They would just walk away disappointed with some money. Okay? They would also get out of the trade somewhere down here, as we know that's the monthly target. And that may also offer an opportunity for us because we believe that's where they'll get out. So they're either going to get out for profit or they're going to get out for loss. Well, not really a loss, but they'll be stopped out versus limited out, right? So this one you're hunting stops, and this one you're taking advantage in the change in trend. Cool, right? So I don't know if you look at it that way. But there's humanity behind these candles, and I think when you get a grasp of that, you'll do a lot better as a currency trader. It's not a video game per se. USD CAD, yeah, I'll switch over to USD CAD just for something different, but there's not an amazing amount of things going on that, but we can go since we did oil. Okay, so I have this stripped down with basically, well, only a 5A cross and an oscillator. So I have this set up for scalping. But I'll tell you, this higher high, lower low, higher high stuff is nonsense. You do better be, right? I don't know. I don't feel like I want to trade it, but you may want to do something like this. Okay, that's, well, we basically already have that. Okay, you want to play in that space? Right? Well, I suppose I would want to start selling. Now, the other way to do this is to switch over, roll over rover, and you could do like, let's look at this from a monthly pivot point of view. Okay. Did somebody logical buy this? Did an institutional buyer buy this? Yes or no? Yeah, the answer is yes, they did. Their job was to buy it at this price. And what are they saying about oil? When they make a trade like that, what do they say? Oil prices should come down is what they're saying. Now, we don't know if that's true, but that's what they're saying. It's implied. Okay. Now, what if you think that is phooey? What if you want oil prices to go up? What if you want the US dollar to go down? What if you want the Canadian dollar to appreciate? What would you do if you were an institutional trader? Yeah, this is your selling price. Huh? So what are you going to do about it, bro? You going to sell it now? You going to sell it now? You going to sell it now? But imagine the amateurs that just, now that they see all these green candles, now they decide to buy. What I'm trying to teach you day in and day out is that if you want to buy it down here, buy it down here, right? If you want to buy it on the central pivot, buy it at the central pivot, right? Have a trade plan down here if you're a bull. Don't be a bull because you see green, 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 green. Now you should be a bull. Don't be a bull that way. You are not in control, and therefore you're not a professional trader, and you'll never be if you trade like that. Okay? So all you can do here is be a bear or not trade it at all. And for this to be a bear, you're going to need some pretty significant weakness in the US dollar, and there doesn't seem to be any reason for that right now. You'll need some strength in the Canadian dollar, and that's probably going to be influenced by oil prices. So you're going to need oil prices to go up. Okay. So Keegan says, wait for resistance. So what I'm trying to say is that there are two definitions of resistance in here. Okay? This dotted red line I call market resistance. Then when I back out, top, 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 I'm like, hey, you know what? This might be a top again. It was top 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times, 11, 12, 20, 30, 40, 50, 60, 70, 80, 90. All right, it's been a top 100 times in the last 30 days. Maybe, just maybe, it's a top again. So this gray zone, I have price resistance. Okay, that whole area, top, 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 top. I'm going to identify as price resistance, and then this dotted orange line I have as market resistance. So if I'm a conservative, disciplined trader, I have an ambush waiting here. I have this booby trapped. I have the high ground. I have an unfair advantage for people just trading along. La-di-da-di-da. Oh, I guess USD CAD's going to go up today. That must be the London breakout strategy. Oh, I think I'll buy it now. And meanwhile, I'm laying in wait. I have crossfire positions, booby traps, the high ground. It's not even fair. I'm waiting. Now, of course, if it goes up and up and up and up, I'm like, well, I didn't get my entry. Okay? But our job now is to be here and be ready. Okay? And that way you're in control. You're not reactionary. You're sitting here waiting. Right? Oops. I didn't mean to do that. Delete. Okay. Well, how would you treat this if you were a scalper, for example? Okay. But what does it mean to a swing trader to sell at 128.90? Basically 129. What does it mean to a bear that sells at 129? Could it possibly be worth more than a scalp? What's the greater meaning here? No, well, more pips. Well, it's not really what I'm going for. I like to be more specific than that. If you could scalp it here on a 1-minute chart, some people pick up 12 pips and they're like, look at me, I'm the greatest trader in the world. I just made 12 pips. But what I'm trying to show you is if you sell at that price, you should try it. Your worth. What you do is up to you. But what that trade is worth is that. Okay? Got it? Was that helpful, guys? Was this a good day? If it was, please do the thumbs up thing before you leave. And also, please visit tradersway.com and open a demo account. Give us an opportunity to earn your loyalty and respect. Our execution speeds are quite fast compared to most of the brokers, like quite fast. I've seen third-party independent analysis, and it's quite fast. Our fees are very, very, very competitive. We enter your trades into the market. You know, right? We've gone through like the Swiss National Bank debacle and other debacles and have not been hurt even in the slightest, where other brokers went out of business. So, you know, when you choose a broker to, you know, for your successful Forex trading business, I hope you consider Traders Way. So give us an opportunity to earn that loyalty and respect. Also, I do this analysis every single day for you for free. So just out of courtesy or guilt, you need to visit tradersway.com and open an account. You just do. Otherwise, your mother will be very disappointed in you. Okay? So peace on earth. May the pips be with you. May your profits be above average. Thank you for all that you do, and I will see you tomorrow. Cheers.